All right. Okay, so you asked me to go over supply and demand. So we're going to start off with supply and demand. I think we touched bases on this last time just a little bit. So supply and demand is obviously you have supply, which is on top, and demand, which is on bottom right. We create these zones. They're not specific. Well, they are specific zones, but they're not a specific price. They're not just basic support and resistance. They're rather zones. You can make them. You can make them pretty accurate. So the bottom one I normally draw green. The top one I normally draw red. The top one is supply, right? So here's your supply. Here is your demand. So demand basically equals support, and supply basically equals resistance. There's more really into it, which I'm going to go over. It's more like these are where the major sellers are going to be at, and this is where the major buyers are going to be at. So when you hit demand, what you're really looking for is major buyback, lots of buying pressure. And when you hit supply, you're looking for heavy selling, right? Supply equals resistance, demand equals support. This is where your heavy buyers should be at, and this is where your heavy sellers should be at. Now, what you're looking for when you're finding supply and demand is market imbalance, right? So when finding supply/demand, you're going to be looking for market imbalance. Imbalance. Okay. So what is market imbalance? So market imbalance is basically a surplus of buy and sell orders, right? So what does market imbalance quite look like? Well, market imbalance is created when there's a surplus of buy and sell orders. So basically you'll have the same highs and the same lows. Now ultimately the highs and the lows don't have to be exactly like the wick of the candle, more like, I'll show you in a second. So theoretically you could have stuff like this. So one of these candles, obviously you'll have like a red candle, which is selling, green candles, which is buying, green candle buying, red candle selling. So we can do this again with the red one. So this is your market imbalance. This is really what you're looking for. As you see here, you got the same highs, same lows, which is creating a surplus of buy and sell orders. This is where ultimately supply equals demand, right? So when supply equals demand, it is where the market imbalance is created. Ultimately, you don't know really where that direction it's going to go. Obviously, you can tie this in with support and resistance and your highs and lows and your oversold and your overbought levels. And then you can tie it in with volume as well. Let's see. So when supply equals demand, that's basically literally you have a surplus of sell orders, surplus of buy orders, which creates this market imbalance. This is where supply equals demand. Ultimately, once the stock chooses a downward direction, this is when supply is greater than demand, right? And direction is down. So when the stock chooses the downwards direction, this is where supply equals demand, and then you go down until that market imbalance happens again. And then this is where the market imbalance happens again. This is where supply equals demand. If you go down, supply is still greater than demand, and you just ride the trend downwards. So let's show you a real scenario on this. So as you can see here, when I draw the supply and demand areas, I normally start on the 30-minute. Now, you can go much higher than that. You most definitely can go much higher than that. But I like to just go to I like to go to the 30-minute just because it's a smaller time frame and we are day traders. So considering we're day traders and we really want it on a smaller time frame because we're trading on smaller time frames, right? Now, if you want to get a larger move, you ultimately can go to like a 4 hour. 4 hours not bad. Just know that you might not hit the supply and demand areas all the time because you're on such a higher time frame. For example, like here, right? You can see how you had the same highs here. So here, let me delete this. There's your highs. There's your lows. This is where market imbalance is created. This is where supply equals demand. And as you see, once you create market imbalance, surplus of buy and sell orders, this is supply equals demand. You choose a direction. This is where ultimately supply is greater than demand. And then possibly you have another one, right? So you have another one created here. This is your market imbalance as well. You can see here where you have the same highs, same lows. Market imbalance is created. This is where supply equals demand. Ultimately, we tank. That is where supply is greater than demand. Now, we ultimately gain support down here at these lows, and we got bought back up. As you can see here, as I went over up here, supply equals resistance, right? So once we created this supply equals demand zone, which is the market imbalance, it is ultimately turned into a supply zone once we determined that it was supply. Once the stock went below it, is now created a supply zone there. So once we go up, you can see where the stock got into this supply and there was major selling, right? And that's what we're talking about up here. When finding supply equals demand, you're going to be looking for market imbalance. Well, actually, I didn't write it down. But supply is where the major selling is going to happen, and demand is where the major buying is going to happen, right? So that is why you saw major rejection here. Now, you can miss these. You definitely can miss these if you're not looking at all time frames. Like I said, it's depending on what you like. When drawing supply and demand zones, I highly recommend you label them because each supply and demand zone is different based off the time frame and what you're looking for. So if I'm going to draw this one up here, I like to draw a line at the bottom line, which really you don't have to. I'm going to label this, right? So I'm going to go here. Let me actually show you how I do this. So I'm going to click on my square, and it should bring up all the settings for it. I'm going to click my settings for the square, and you might be on the style. Just click text, and this is where you can write on it, right? So this is where I'm going to say, this is my 4-hour supply zone, right? You don't even have to say zone. You could just say 4-hour supply. And I'm going to change the color to red because I like to label things, keep things nice and neat, keeps you organized, right? It's all about organization, staying disciplined, preparing and planning, proper position sizing, and portfolio management, right? So I'm going to label this as my 4-hour supply. I'm going to press OK, right? Whoa, didn't mean to do that. All right, cool. So now that we got that labeled, ultimately, I like doing this. You don't have to do this, but I really like putting a line at the bottom. It really like contrasts with the square, right? So you can see how we had major selling here. Now, ultimately, you could see another rejection here, but you have to be careful because supply zones can get weak if you ultimately see that selling's not strong in a supply zone. You could ultimately break a supply zone. Just like any support or resistance, you can break through these. They don't always work, but they work majority of the time. They work good enough for you to use it, right? They work actually very well. But you got to understand that they can be broken depending on market conditions, depending on how oversold you are or how overbought you are. You can break them, create new ones, and so forth, right? So let's just delete this because now we're going to go to a smaller time frame on which I wanted to show you. So normally I just do it on the 30-minute because we are day traders and we trade on lower time frames. So if you were doing supply and demand right here, you're going to be looking for your market imbalances, right? You're going to be looking for this, your surplus of buy and sell orders, which should ultimately have the same highs and the same lows. Now, it doesn't really matter about the candle wicks, but rather the body of the candle, right? So I can see here that there's you can see the lows here. So let me mark that. You can see that how there's noticeable support here. Green candle, red candle, red candle, green candle, red candle, green candle, sell off. So you can noticeably see a support here in these little doji candles creating, I would say, a market imbalance, right? So you can see the lows and you can also see the highs. Now, ultimately, you could have labeled this as a supply zone because this is where supply equals demand, ultimately tank, and then that is where supply is greater than demand. Now, it's just like any support or resistance. If you have a resistance here and a support here, and ultimately the stock gets under support, it can act as resistance. But if you get back over it, it's now acting as support and the stock might go up. Same thing with supply and demand. Now you can see how this really was supply and the market ended up tanking and going further down. But you can noticeably tell how the market actually gapped up and reclaimed that supply zone, which ultimately creating a demand zone, right? We can change this to green, and you can see how the market opened right on top of this. Now, this is Tesla. So with this being said, if you're using this strategy right here, you ultimately could have hit this sucker with a bunch of calls at open. Just with this one simple strategy, you could have easily, not only with supply and demand could you have noticed this, but if I delete all this, you still have really good support here. So not only that, you still have to go with the basics. So you have really good support here. I would say like Tesla's extremely oversold. That is really why you saw Tesla do better than majority of the stocks today, because you got your highs here and you got your lows here forming, and you got some good support forming here. Now, we did break these lows, but we gapped up. Now, when looking at gap ups and gap downs, so a gap up equals a break of major level of resistance, which can become support, and a gap down equals a break of major level of support, which can become resistance. Right? So with what I'm saying here, a gap up equals a break of major level of resistance, which can become support. So you can see how we created a support here, which ultimately we broke, which you would have called a resistance now. Now we gap back up, which means we're breaking a major level of resistance, and we reclaimed it as support, and then you see the stock going up. Or you could have done the supply and demand method, right? You got market imbalance here, and you got a reclaim of that demand, right? And then you can see where demand is much greater than supply and the stock goes up. Now, ultimately, you're looking for a reject, right? So if you're looking for a reject, I normally look for, so when I do these, I look at the previous day. So that could be one of your questions, right? How far back are we finding these supply and demand zones? I normally go to the very previous day. Now, considering that the previous day here, do you see any candlesticks like this? Do you see any same highs, same lows? No. All you see is major selling. So ultimately, I can't find a supply zone right here unless I go to a smaller time frame, right? If I go to a 15-minute, I might be able to find one. Nope, I can't. See, just major selling. If I go to a 10-minute, I might be able to find one. Maybe right there, but that's just one candlestick. Maybe the 5-minute, right? The 5-minute might help me out. You can see that there's a little surplus of buy and sell orders here. And you might be able to draw a zone there. but that's still on a very, very, very low time frame. This is still on the 5 minute. Uh, I kind of like larger time frames, right? The larger time frame, the better. So what I really want to point out is here. Now this could be multiple things. This could be a upwards trending channel, right? You got the same resistance and the same support going on. You got top, bottom, and you failed to go to the top, and then so forth. So that's the end of the market day. I would say we're going to find a supply here. Now, let's go back to that 30-minute on which we were working on. Now, it's a little tough here. This comes with, I guess, time of learning this stuff, but you can see that we have highs here, and you theoretically could say we have our lows there. Now, considering that this candlestick was the same high as well, you might just want to be safe and possibly just count that bottom one in and just throw this whole thing as a supply zone, right? You could have easily thrown this whole thing as a supply zone, and you could have been looking for a reject on Tesla around up here. But as you know, we were coming off a demand level, and Tesla was severely oversold. We're breaking above it in post-market, but as you can see during the actual live market hours, we actually tested that supply quite nicely. We went all the way to the top of it and then ended up getting rejected. So let's go over a few things. When finding supply and demand, you're going to be looking for market imbalance, right? Well, what is market imbalance? Well, market imbalance is a surplus of buy and sell orders. Well, what is that? What does market imbalance look like? Well, market imbalance looks like this. It's associated with the same highs and the same lows, which ultimately creates supply equals demand. This is where they're equal. Supply is equal to demand because the sellers and the buyers have not chosen a direction. Once you've chosen a direction, that is when supply is greater than demand, and that's when the selling starts. Supply is equivalent to a resistance. That is where the sellers are at. Demand is equivalent to support. That is where the buyers are at. And this is what you're looking for. Hit supply, major sell-off. Hit demand, major buyback. Here's a little bit about gap up and gap downs. I figured I'd include this into the lesson because you had a gap up here. You had a gap up, reclaim support, and demand. Ultimately, you had a bunch of buying. That's a good thing. That tends to happen a lot when you're breaking major levels, right? We know that this is a major level on this support down here, so it tends to happen a lot on your major levels. Let's just say, let's see. I mean, we can go back further too, right? So, like, let's delete some of this. Let's delete all that, right? So ultimately, let's go to the 30-minute because I like starting on the 30. We can go ahead and get these highs and get these lows here, and we can create a supply zone. My bad. I'm so sorry. Let me go over how I'm drawing these supply zones on how precisely I'm getting them. How do I know how to draw these zones? So I'm on the 30-minute, right? So I'm on the 30-minute, and you're asking me, well, how do I know how to draw these? So you figure out your area, right? I would say this and this is all the same highs, equivalent to the same lows. You got super good support down here and super good rejection up here, right? This is ultimately a imbalance. This is where you have a surplus of buy orders, sell orders, buy orders, sell orders, buy orders, sell orders, and then you have your sell off. This is where supply is greater than demand. When I'm drawing these zones, I'm going off the body of the candle. So as you see here, these are the wicks. Here's your wicks, and then you got your bodies, right? So when I'm drawing this zone, I'll zoom in really, really close for you. I'm going to be drawing on the highest body I can find. So on these highs here, on the 30-minute time frame, I think this red one's the highest one. So considering I think this red one's the highest one, that is going to start my square. That is where I'm going to begin my square at. And then down here, a red or green, doesn't matter. It's actually really close in this scenario. So I'm just going to put it on the bottom of both of them because I'm just going to go to the lowest one. So the body of these candles and the body of this candle. Now, ultimately, I did lines, but I'm about to highlight it. So when I draw my square, I'm starting at the highest body candle and then the lowest body candle within the market imbalance, which creates that supply zone right there, right? So let's see. Let's go to a 15-minute here. So you could theoretically consider this a market imbalance. You don't have really too much to work with here, but there's a lot of selling. You got buying, selling. You can go into post-market if you have to. We can go down to a 10-minute time frame. You might be able to see it just a little better. 5-minute time frame, you might be able to see it just a little bit better, right? You can see where there's support, selling, and then a little bit of support down here. You haven't really broken these lows yet. Let's see. So you go back to the 30-minute, and you can kind of see how you had major selling at open, and then you had a buyback, major selling, buy, support, and then the buyers ultimately pushed us up, right? You can see how that supply zone started getting a little weaker and weaker as the let's just say as the sellers weakened, the buyers got stronger, right? So we can draw this out, and ultimately, right, let's keep this color coded. So I would make all this green because this is our demand. This is where you're expecting buying. Now, that is how you would have predicted this day, right? So now, considering that this day is done with, I'm going to see if we can predict it this day. So let's see. Let's go to a 15-minute time frame. So I'm going to say that this is a little bit of your market imbalance. You see how you had the same highs there and you have the same lows. Now, when I'm drawing this, I'm putting these lines on the body of these candlesticks. I got the tallest candlestick here, and I got the lowest candlestick here on the body. So when I draw this body, this is going to be my demand zone. And you can label these as well. I'm going a little fast here, but look, we can label these. We're supposed to be labeling these. So this could be our 15 minutes, or we can just 15-minute demand, and we can label it right. Make it green, because this is where you're looking for the buyers to be at. And then this is a supply zone on which we haven't hit yet. So I'm going to keep this up here. We ultimately drew this on the 30-minute, right? We drew this on the 30, so let's go ahead and label this. This will be our 30-minute supply. We got a 30-minute supply and a 15-minute demand. Those are the time frames on which we could find those. Because I'm on the 30-minute now. On the 30-minute, you can't really see what's going on here, but on the 15-minute, you can definitely see that there's some highs and lows going on here. Possible reversal, right? Market imbalance, supply equals demand. Ultimately, we go up. That's when demand is greater than supply. Now, let's go ahead and just play this day out just a little bit. I mean, we could get a supply zone over here, ultimately. I mean, you could have... let me see. Let me go back to the 15. Let me go back to the 30. You could theoretically have a supply zone here, depending on how careful you want to be, right? You rather be a little more secure than you rather be safer than not safe, because theoretically I could go to the 10-minute and I could see a little more. If I went to the 10-minute, I would say this looks more accurate as of here, but that creates my supply a little smaller. So theoretically, I'm just going to extend it just a little bit. Even if I'm wrong, that's totally okay. I just rather have a little bit of lee room, if you get what I'm saying. I mean, the supply could be down here, but I like to draw it a little higher on this one because it's a little unsure. I'm a little uncertain on this one. So considering I'm a little uncertain, I'm going to just like be on the safe side. I'm just going to make it a little larger just in case I'm wrong. Now, if there are any times on which you're uncertain, then this stock might be not the stock you play. Because if you can't be certain about a supply and demand zone, I can assure you there's another stock like NVIDIA, AMD, SPY, Amazon, Google, QQQ, Apple, Microsoft. I can guarantee you one of those have more clear levels. So if you're not too certain about a supply and demand zone on a certain stock, then just go to a different one, and you could be more certain. Go to one that is more clear to you. So this would be it doesn't matter, 10, 15. I'll just say it's a 15-minute supply. Now, let's just play this out. Let's see what this does here. Okay, so that is why we keep that 30-minute supply up here. Now, the reason on which I kept this 30-minute supply up here is because we never touched it. We never touched it this day. So that's exactly why I kept it there. So let's keep playing this because I'm real curious on how this works. Okay, cool. So ultimately, we flew past our 15-minute demand. We just ultimately, well, first of all, we had a major sell-off. Second of all, this is CPI. This was the day that CPI came out, as everyone knows. You also had accumulation. This is accumulation pattern. This is where a tight squeeze within a price. You don't have any direction, but the price squeezes real tightly. You have same highs, same lows. Ultimately, you could call this market imbalance. This is where supply equals demand. But this in particular, or this particular pattern, I call this accumulation. This is a very particular pattern that I look for in the market. It is called accumulation. It's a squeeze in price. You can see how the price is squeezing here. Okay, so on a 15-minute, right, because this is a 15-minute supply, 15-minute demand, and 30-minute supply. On a 15-minute zone, you can see how we blew past this demand. We went all the way up to the 30-minute supply, came back down, hit the 15-minute supply, which, like I said, acts as a demand now, right? And then it went back up, hit the 30-minute supply, and sold. The 30-minute supply zones are where your sellers are at. So you can clearly see how we hit this and a bunch of selling. We hit this and a bunch of selling. So that's cool, right? We were able to play that in real time. We were able to see how that exactly happened at our supply and demand zones. Now, there's more that goes into it. You can have volume and stuff like that, but I'd rather not get into the volume just yet. We are taking baby steps with this stuff. So supply and demand is still great to use, whether you know how to use volume or not. I just think you should focus on drawing these supply and demand zones, learning how they work, back testing them, making sure you know how to play them, right? Volume comes later. I would think volume comes a little later down the road. So that's cool to see, right? We were able to see that on a smaller time frame. Now you might understand on why I said we do this on a smaller time frame rather than the 4 hour. Because on the 4 hour, I mean, this is where it might be at, or this is where it might be at. It's just we are day traders, so like the 15 and the 30-minute time frame just suits us much better. It just suits us way better, right? And so forth. So we can delete all this. Let's just delete it all because this is previous days. Now, if you want, we can try to see if we can predict the day after, right? So I know here, what were we on, the 10-minute? So I know that we could possibly consider this a demand zone here. So let me make sure you understand exactly how I'm drawing these again, right? So I'm finding my highs and I'm finding my lows. So once I find my highs and I find my lows, I'm going to go ahead and tell myself this is your market imbalance. So once I come to a conclusion that this is my market imbalance, I'm going to be drawing my box just like this. I'm going to find the highest body candle. So in this scenario, this red one is the highest body candle. So that is where I'm going to start my zone at. Now I'm going to be looking for the lowest body candle, which is going to be this green one. This green one is the lowest body candle. That is where I'm going to end my zone at. So that is how I'm drawing these supply and demand zones to make them accurate. So once I figure out the highest body candle and the lowest body candle, like I said, this is where I'm going to start my zone at, and this is where I'm going to end my zone at. I'm going to create this green because this is where the market imbalance happened. This is where supply equals demand. Ultimately, the stock went up. So this is where demand is greater than supply. This is where you have market imbalance or supply equals demand, right? Market imbalance or supply equals demand. Stock goes up. This is where demand is greater than supply. Okay. Now, we can find, let's go to maybe a 15-minute, right? Maybe a 30-minute. This is the day on which I said we should probably come down here. My screen's glitching up real bad. I'm sorry. So there's a couple ways you can go about this. You can do this, right? You have your highs. You have your lows. Let's see. Oh, the 45 is pretty clear. Okay, cool. Let's do that. Let's just stick it here. Let's make this red. And let's label this as a 45 min supply. Let's delete all this to get it out of our way. And this was a 10-minute. It was a 10-minute demand zone. So let's go ahead and label our demand zone here. 10-minute demand. Let's create it green. And let's go ahead and play this out. So we're going to be watching the stock to see what it does here. We have our 45-minute supply and we have our 10-minute demand. Now remember that we never theoretically tested this demand. We didn't really give this demand a chance. So this demand could still be in place. But let's just see how this works. Okay, so you see how we opened up in supply. So considering we opened up in supply, you had major selling at open. And then boom. Okay, so you can see how the buyers tried to pick up here, around this demand zone, but we weren't quite strong enough. So let's just delete it. Now you can see how the buyers are trying to pick this thing up here. They are trying very hard. And they just couldn't do it. So they couldn't do it. You had a sell-off at close. This was right before the market ended, right before the market closed. Normally there's a lot of volume that kicks in right before the market closes. You can see here how there's a lot of volume that kicked in that ultimately probably could have caused that demand zone to fail and to tank. But this is what I'm talking about the gap up, right? So we still have that demand zone because wouldn't you theoretically say this is still a zone? You got your highs, you got your lows. This is still market imbalance. So even if I deleted this 10-minute demand zone, I would still be drawing a new one here because this is the same thing that happened here. The same level, the same top, the same lows. And then you can see how the market gapped up and we opened up right back in demand. And this is where the market goes right back up. And we're testing that supply a little bit. And you can see how accurate we got those sell-off points, right? Sell-off, gained support, went up to the top, sold off once again. That is a little bit about supply and demand. If you have any questions, please just let me know. And I think I'm going to end this here.